Lightning like Steve McQueen. I'm in the fast lane when the light turns green. And I built tough, I ain't nothing but grit. Cause I made rugged blood, sweat, and spit. Yeah, like a horse I fly. Better push yourself in for a bumpy ride. I like to play hard, but I work harder. And I weather the storm cause I'm built stronger.
What is up, ladies and gentlemen? We are back. We are live. It is the Freight Coach Morning Show, the top morning show in transportation, coming to you guys every single weekday, 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines. And most importantly, provide some actual insight into what you can do with all of this information. If this is your first time tuning in, welcome. This is the real side of freight, ladies and gentlemen. And I say that before every single show. And what I mean by that is I only speak to transportation professionals on this show, as well as my twice a week long form podcast, because I want to talk to the right individuals who have done what you're looking to do or who are currently doing what you're trying to achieve. So you can take that information, apply it, utilize it, and see a meaningful difference in your business and your life. All right, you guys, we got a guest on today. I'm going to waste no time bringing him on, and we're going to talk about a lot of the data that's out there. How do you break it down? What's applicable? What's not? Where are things going? And with that being said, I have Dr. Jason Miller on the show. Jason, thank you so much for joining me.
Hey, thanks for having me on, man.
No, I really look forward to this. And, you know, I follow you, and I tell people all the time that they need to follow you and follow your posts. And, you know, I just think like there's so much information that's out there for people to digest, and, you know, what's applicable and what's not. And, you know, there's so much that could be misleading out there in the market. And, you know, because like I talk about it all the time, you know, the overwhelming majority of the stuff out there isn't applicable to a lot of providers, because the most of us need to focus on building our business, building our book of business. And you can't pay attention to where tender rejections are at and like what national averages are at and everything else, because it's almost more of a deterrent than anything for people to do their job. And I want people to focus on like, hey, you still got to sell. You still have to go try and develop anything to keep your business afloat.
No, exactly. And I think this is the key thing that we're, you know, struggling with, to figure out what is that right mix of incorporating, you know, macro national level data into decision making, while also recognize that each company is in its own unique position. And therefore, okay, you know, the trucking ton mile index I produce, that's not really going to be that applicable right now for you if you are a flatbed carrier that primarily hauls lumber down to Florida, where there's a lot of housing construction going on. The fact that that's down year over year is unlikely to reflect your book of business. And so to me, I think the thing is that when you think about a lot of these data, you incorporate them to form that sort of strategic 3, 6, 9, 12-month ahead picture. And so if somebody was saying, well, should I be expanding, you know, my capacity right now as a carrier? Well, unless you're having very, very, very successful shippers who are telling you we've got great confidence that our business is growing, I tell you, like, it's probably not the best time to think about it, because it does feel that even though we're bouncing along a bottom, it doesn't feel like there's anything that's really going to get us off that bottom anytime soon. So I think it's a great point that for day-to-day operations, any type of sort of nationally representative data is not what should be driving your behavior.
Yeah. And it's, you know, because I see, you know, and I want to be abundantly clear, like all of these data points are valid, right? Like they're good to look at, but I just don't want to see anybody make any major decisions based on one piece of evidence, right? Like I use the national average for pricing as a pretty consistent example. Like, you know, if you used that to price your freight, you're going to go broke like really quick, because there's so much circumstantial things out there that you need to take into consideration. And it's like all of this, a lot of the information is good, but like, don't let any of this stop you from making decisions inside of your business if you're not at a place. Because like, you know, like you're talking about like fleet expansion, for example, if you're in that position to, you know, double in fleet size or something like that, you're not in the same stratosphere of business as like the overwhelming majority of the providers that are out there that are like, hey, what can we do to stay solvent in this market to navigate through this ebb, or the ebbs and the flows, so when things pick back up, we can actually start, you know, paying off our debts and everything else. I think like there's a lot of stuff out there that I don't want to say it's anything other than a talking point from some, but like as somebody who's trying to build their book of business and trying to build their business up, like I read everything and we talk about it, but that's not going to stop me from going after business. I'm not going to look at that as, oh, well, such and such said this is at that. I should probably not prospect this week.
No, exactly. And what's important for everybody to realize, and we know this from different government data sources, is even in a down market like this, there are manufacturers and wholesalers who are expanding shipments and expanding outputs, right? And so you almost always have to think about it is it's always a distribution. There's going to be some firms expanding and some firms contracting regardless. I mean, for example, between 2017 and 2018, a very strong bull market period in trucking, we had a bunch of firms expand, but we also had a bunch of firms contract and go out of business over that same period. And the same thing's happening on the shipper community side. And so you always have to be prospecting for additional business, maybe finding a customer that, provides you a nice backhaul, get your overall cost of business for other customers down. We just have evidence too that some shippers will get lucky. They'll have a 3, 4, 5-year run of amazing success. They introduce some new product that gets hot, but then eventually that, craziness dies down and, they return to the trend line. And so these are the dynamics we have to think about. So even in a down market, there's always shippers out there who are looking at moving more freight. It just isn't as many as we see during an up market.
Yeah. And, like I talk about, like I literally just said this yesterday. We've in the last 6 weeks, like I always call them prospects until they pay us, we're now quoting with 9 different prospects in the last like 6 weeks, essentially. So there are people who are always looking for quality providers. And I think like that's just kind of my biggest piece of, a lot of the stuff that I talk about on here is it's like, no matter what, there are going to be people out there who are going to add you. They're going to let you quote. You're probably going to start hauling freight for them here eventually as well. But like, it's not, I think that a lot of people have so much emphasis on how things were in late 2021 and 2022 that they think that like the world's fallen apart because it's not operating in that manner anymore. And it's not an open checkbook. That's just not sustainable for any economy to ever operate with success over the long term.
No, precise. And this is, I think, a very good point is, we have to take essentially from June and July of 2020 through about March of 2022 and forget anything with that ever happened, because that is a outlier, black swan, anomaly type of situation that was anomaly on top of anomaly on top of anomaly. And I think the reason this freight recession feels so severe to folks is just as you mentioned, rates have come down the steepest they've ever dropped in history, but also we saw the steepest run up in history. Mm-hmm. But when you look at freight volumes right now, they're actually right where they were in 2019, which wasn't a great year, but it's not like we're talking global financial crisis 2009 levels when they were 20% below where they are today. Mm-hmm. And so, as I compare this freight recession is the great freight rate decline freight recession, whereas the global financial crisis was just freight demand dropped 20% in the course of about 20 months.
What's something like, how does your everyday individual, like a guy like me who is out there just trying to make it in this economy and, because again, like you're talking like that. And, I've heard from, I do a lot more research than some people might actually think that I do. I don't just talk shit all day long. But I look at that, like the overall economy is performing way better than it was in 2009 and other levels throughout my career. But like, what could somebody focus on? Like, where's a good area that somebody who's just trying to build their business, they got payroll due here in 20 days and they got their notes that are due from the bank. What's something that people could focus on from like a sliver of light that like, hey, I have to keep down this path right now. It's going to improve.
Yeah. So, I mean, right now, from the, I guess, economically encouraging standpoint, we still have very low unemployment. Our initial unemployment claims are very low. People have jobs. Wage growth right now is as strong as it was in the 1990s. It's way stronger than it was in 2018, 2019 even. So people are, year over year wage growth is actually really strong, which is encouraging from an overall economy moving forward standpoint. The challenge in this disconnect that arises is that when you look at the sectors of the economy that generate freight, the big three are manufacturing primarily, then wholesaling, and then actually mining and quarrying. Those three together account for like 92% of freight demand. And the reality is those three sectors combined make up maybe we'll say 18% of GDP. And that's where you can have an overall strong economy. The freight generating part of the economy is terrible. And even within sectors like manufacturing, from a GDP standpoint, the sector that matters the most is computers and electronic products, which generate hardly any freight. Mm-hmm. So you take a look at a sector like paper manufacturing, where paper production today is down 10+% from where it was in 2022. That's almost 1 million truckloads a year wiped out, with that sector being down the way it is. Mm-hmm. And, that's what makes it feel bad. For folks looking at growing, portfolio, the number one thing to look at is food manufacturers. Food manufacturing, beverage manufacturing combined together is almost 20% of all the ton miles the trucking companies ship. I mean, you should be watching very closely how, every major food plant in your local area, if you're a small player, you should know the folks at those plants who are tendering freight, because food manufacturing just generates so much stuff that needs moved. And it's typically a fairly long haul, because you put food plants fairly close to the sources of food, because I hate to say it, but live cows and live pigs are a heck of a lot harder to transport than box cows and box piggies.
Yeah, that's very true. How do you read freight markets? How do you read where things are possibly trending? Again, there's a lot of data that's out there, and because from my perspective, I look at overall, I look at 30, 60, 90 day, I look at current market, and then I also take into consideration like what factors of the shipment are like, how does my customer actually tender the loads, right? Is everything last minute? How does this look like? So I think that there's multiple factors in there, but I think like it's not as challenging as some people want to make it out to be. So like, what factors do you look at? How do you read where markets are trending?
So first thing I put, and this is going to be sort of a truckload sector focus here, is where are spot rates at, especially relative to contract rates. I've always found DAT's spot rates with fuel included. So I am not one of these people that believes there is no such thing as a line haul spot rate, right? That is a statistical artifact of assuming a fuel peg and removing diesel price based on that assumed peg. That creates, I think, a major source of essentially artificial noise. So I always look at spot rates with fuel that DAT puts up online, and I look at that compared to the broker by contract rates. Anytime we're in a situation today where there's a spread between the two of like a 20% spread of contract minus spot over the average of the two for a given month is 20%, that's a sign of a weak market. Mm-hmm. So I look at how dry van spot rates are trending, and I look at that spread between the dry van spot rates and the broker buy rates. There's this magical 10% threshold. Every time we cross below 10%, the examples of the months we did that were June of 2017 and then June of 2020. Those sound like pretty good, bull market months. And then anytime that rate gets above 15%, that happened in January of 2019 and April of 2022. It's pretty darn predictive of when it felt like the market shifted. So I'm looking at that from just a pure sort of where's the immediate supply and demand balance in effect. And then for me, I'm looking very extensively at the Federal Reserve publishes industrial production data, which measures physical quantity outputs from various industries in the U.S. So food, chemicals excluding pharmaceuticals, a weird one that's called non-metallic mineral products, but that's like bricks and gypsum and cement and concrete blocks and things like that. Primary metals production, so steel, aluminum, I'm giving those a pretty close look because those just account for a disproportionate amount of freight. I'm looking at wholesale data. Census Bureau publishes inflation-adjusted wholesale data. And then also for wholesaling inventories to sales ratios. So like as an example, you can see high inventories to sales right now from a historical standpoint in machinery wholesaling, which is a huge sector of wholesaling. It's, $50 billion a month plus of sales. I see high inventories to sales ratios, then I look and think, well, that's not a great sign for upcoming machinery imports or domestic production of machinery over the next 3 to 6 months. And so for me, I take an approach that's, I'm going to say, very industrial oriented, because the one thing you're going to notice I didn't mention in all of this is I didn't mention imports, and I didn't mention e-commerce, and I didn't mention retailing. And then you look at things like single family housing activity, existing home sales, those kind of help. And so they can be informative, but then a lot of it's qualitative, where do you think things are at? Where do you see things going? Type of thing.
So with all, I mean, you're bringing up a lot of, practical, good information for people out there. And, because there's so much more that goes into I think that there's a lot of reactive mindsets that go into any industry out there, especially in today's day and age with social media and, and media kind of taking, some media taking things one angle or another. And it's like, what's actually real? And I think, cause like, that's what a lot of people who listen to my show and stuff like that, they're like, they just want to know, like, how do I stay in business, right? Like, how do I navigate through these markets? Like, it's not like they don't care about what import and export levels and stuff are at, but they're just like, that doesn't help them pay their bills, right? And I think like, this is why it's important to kind of hear things like that, like, because all of this information is public, right? Like you're talking about where is a lot of this stuff published, like where people can actually look at some of this data?
Yeah, so a lot of this comes through something called the FRED database. And for anybody who's interested in knowing more, just connect with me on LinkedIn. I can send you some useful resources. But FRED is sort of one of the data repositories. It's kind of like a data library. And once you get used to it, you can pull data of this sort pretty simple or pretty straightforward. And so the nice thing too is you can even, start getting creative and counterbalance seasonality. So as an example, let's say you're a dry van, carrier, you've got exposure to the auto sector. Well, we all know auto goes into a major slowdown in July as they retool the plants. But on the other hand, you see a sector like the canning of fruits and vegetables actually ticks up during that July period. And so you can start thinking, okay, can I get creative, counterbalance, and seasonality? How can I better plan for that? And sort of balance things out. And so you can do a lot with the data, again, from a very macro level of just even understanding what in the world actually takes place in this industry. So I'd say those are probably some of the best resources. And then again, a lot of it is your own personal experience. I mean, at the end of the day, the most important variable that we've found in study after study that predicts the survival of any industry is productivity. How much dollars are you making per person on your payroll? How much dollars are you making per unit of input, broadly defined? Productivity is the number one predictor of success.
I mean, I can 100% agree with that. And Uma Taylor made a comment here, with everything that's going on, the lessons that I've learned when it comes to a new business at the beginning, you should just make money just to cover your costs, put your name out there. Don't be greedy. If you make more, great. If you're not making enough, if you're not at a loss, it's a win. Once your name is out there, people know about the quality of your service. People will want to work with you. Just don't freaking slack off, work hard, work really hard, and you will get there. And I literally just think fundamentally for the 98% of this industry is it's your outputs. You need to increase your outputs more than anything right now, because, I broke down an article a couple weeks back, and it was talking about when Warner Logistics released released their financials for Q1, and it showed that their brokerage was at like a loss of I think $2.3 million or something like that for the quarter. And I had explained to people, I'm like, this is what you compete against out there is a lot of these larger providers, they have cash reserves to burn for revenue grabs in these down markets because they can afford to lose money during this time to preserve revenue, to preserve actual freight volumes, because I didn't break down their entire report. I didn't see what their overall freight volume moved was in quarter 1, but I would argue that their volumes are probably staying very similar in this times. They can just afford to operate at a loss because that's what a lot of larger providers do. They stay in the door, they work at extremely small compressed margins because they know the market's going to rebound eventually. And it's just a giant game of chess, right? It's a giant game of chess where they're like, hey, I will bleed out my competition. That's just how the world works.
Well, and sort of two things. One, they can do that because, take Werner, take JB Hunt, any of these big public TL carriers, they make much of their money on the dedicated operation that is a different pricing structure. JB Hunt bases their index-based contract pricing for dedicated freight on JB Hunt's cost and then an acceptable margin. So if you look, JB Hunt's truckload division rates go down much more in a down market than the dedicated side. And so you're competing against, as you mentioned, carriers that can essentially use one unit to subsidize another, subsidize that brokerage base. The second is what I would say is if you're a small provider out there, your best competitive strategy is to have a very niche tailored offering that fits a small number of shippers that are also themselves going to tend to be small. The way you have to think about every freight generating industry in the United States is there is a small number of mega players out there that generate gobs and gobs and gobs of freight. Take the Procter & Gamble and the consumer product space, right? There's also thousands of small manufacturers that are competing in the same space with differentiated products, producing a fraction on a per firm basis the same amount of freight. If you're a small provider and you decide I'm going to go head to head with C.H. Robinson from a brokerage standpoint for a big shipper account, you are going to lose 99 times out of 100. But you know what? C.H. Robinson doesn't want to touch that super small shipper. That doesn't give them the freight volumes they need. But that shipper can give you the freight volume that you need. Mm-hmm. And I think this is the way you have to think about business as big folks work with big folks. Smaller folks tend to work with smaller folks where they can tailor things and really bring that value proposition out. If you're a small brokerage with a small carrier stable, not to be mean, but you bring very little value to a, mega account like a P&G or a Unilever.
No, I mean, that's 1000% accurate, Jason. And it's like, and then in these down markets where we're at right now, all the large players are calling everybody. They're working with everybody, even the small ones, but eventually they all gravitate away towards the P&Gs of the world when markets recover. And then they forget about Tom's, chicken processing plant in, Enid, Oklahoma. I'm just making all of this shit up, you guys. But like, that's why it's like when you're out there and you're prospecting, like our main thing, like obviously as a broker, we'll work with anybody inside of the open deck space, but our primary outreach is to that small to mid-sized market, that has, anywhere from 5 weekly shipments to, 500 monthly shipments, essentially. Like we've chosen a target market and that's what we go after because I know eventually these larger players who are able to work on compressed margins are going to go away for their higher paying customers. And then that's the separation season. So when people are looking at when the market flips and capacity tightens up and everything, that's your opportunity. When everybody else runs to their better paying people, that's where you have to separate yourself. And if I'm looking at like the overall financials of a lot of these companies here over these last couple of years, everybody's revenue is back down to where it was pre-pandemic. That means nobody did, in my opinion, nobody did anything differently during that time. They all operated the exact same way. Nobody separated themselves. That's why I am so gung-ho on a major shift happening of, at least from my business's perspective, to explode because I know how to operate out there. But, you're right. It's very tough to compete right now with some of those larger providers because they have algorithms for everything, you guys. All right. They know exactly how much it costs them from their very first cold call to a shipper to processing that very first invoice. They know their customer acquisition, their CAC. They know exactly what that costs. So that's what you're competing against. And it's very challenging to fight against somebody who knows that it costs them $78.32 to process one invoice.
No, it's very true. And again, you're also competing against that, mega name brand that everybody knows. And I think this is the thing is, as a smaller provider, it's about finding that niche, customizing, tailoring, showing here's how I can deliver unique value. I can give you that attention that the mega provider is not going to give you, even in the best of conditions for you as the shipper. But I promise you, in the worst conditions, when all of a sudden there's more demand out there, they're not going to give you the time of day. And you can think of it this way. Every one of these small manufacturers or small wholesalers, they go through the same dynamics with their customers, right? As I used to do industrial distribution. I had 3 accounts that accounted for almost 50% of my store's sales in an area. Those accounts are doing $20,000 to $30,000 a month. I service them to the better end, and the accounts that were going to do $500 a month. Yeah, I love that, but that wasn't the end of the world. If I was overwhelmed by my $30,000 a month account had a surge and they're up to 50,000, I'm sorry, but if I've got inventory and it's got to go to the mega account, sorry, but I'm out of stock. I'll get it to you in 2 days. Same. So they're going through the same dynamic. Point being, they appreciate that tailored service that you can provide them.
Yeah, it's, and this is like, I think that what you just said right there, Jason, is so necessary for a lot of people to understand and really think about here as they're waiting for things to improve, right? Because it's like, I mean, just think what, like, you're talking, $5,000 a month in gross margin, for example. That would be the biggest account for a lot of providers that are out there. And it's like, you can cut off that small sliver that's out there. I mean, like, literally from a business development standpoint, I look at it like this. I just need 10 different shippers to give me $1,000 a month in gross profit. Like, I mean, right there, that's a big chunk of money that we're talking about right there. And then again, it's apply, it's rinse and repeat. You find those strategies, you find your target customers, and then you go after them, because those manufacturers are literally everywhere across the country, and they're not in power cities though. All right. So like, I'm telling you guys, you can't go to Atlanta, Georgia and compete on Atlanta to Chicago with Knight Swift and CH. They're going to decimate you. Okay. But you can go out the 7,500-mile radius of there and you can carve out a nice book of business. And there are carriers out there who exclusively run those lanes.
Nope. And yeah, just to give everybody a number, in the United States, there are 250,000 manufacturing plants that are all generating freight each and every day.
Jeez.
And so, and again, a small number of them are disproportionate. I mean, the big auto plants by me in Michigan, I mean, it's incredible. Or a big food facility, 100, 150 truckloads a day out of a massive food plant is not an unreasonable number. If you're a small service provider, I'm not to be mean, but that transportation manager ain't worried about you getting 2 or 3 trucks. They need gobs and gobs and gobs of trucks. And so that's where you have to think about this. And again, the other thing, and you brought this up, Chris, you got to keep prospecting, because there's also a huge reality that customers churn, not only because they maybe find somebody better, but they also go out of business themselves. And so you have to be thinking, okay, you don't want to be too dependent on some very large account. 40% of your business comes from one account. If that account goes under, you're probably done. And I will tell you, there was a survey done years ago of small and medium-sized trucking companies. And what they found was, for the smallest group of carriers, on average, 35 to 40% of their business came from their top customer. And so you think how anchored that carrier was to one specific shipper. You may not want to be in that situation, because that shipper goes out of business. How are you going to replace 40% of your revenue overnight?
No, and that right there is the biggest threat to so many businesses out there, Jason. And that's not just a transportation threat. That's an overall small business threat, where I believe it's the Pareto principle, right? Like 80% comes from 20% 80% of your revenue comes from 20% of your, and the same thing with sales and everything. But no, it's true, man. And I think like that's why it's so imperative for people to, I'm not going to say don't pay attention to overall data, because you do need to pay attention to this stuff, but do not let that deter you from going out there and fighting for market share and fighting for your business, because nobody else is, right? And if you're going to compete with some of the larger providers, you just legitimately just do what others aren't willing to do. All right. Everything that's hard out there, right? From a freight perspective, short haul, regional, nobody wants that shit. Everybody wants long haul. They want 1,000 miles or more, or 750 miles or more. If you take a 300 mile or less strategy to the market, yeah, the margins might be slim, but nobody's competing with that. Nobody wants that stuff.
Well, and I'll tell you, this is the reality, is if you look at average shipment distance in the truckload space, there ain't that many 1,000-mile shipments relative to the number of 100 and 200-mile shipments. Where you got to be careful as that broker, though, is you start then running into sort of these dedicated, very local carriers, the asset-based providers, who that's all they do. You're trying to make margin on top of that. You're not going to be able to compete with them. So that's where, if you can find those shippers too, where there's inconsistency, that is a broker, inconsistency for the shipper is your friend, because that means asset-based providers don't want that business.
And that's it, man. Well, hey, Jason, that's going to be it for today. I appreciate you joining me, man. Thank you so much for coming on and breaking down this data. And as always, you guys, if you guys got value in what you heard here today, subscribe to the show, you guys. Share it out there to your network, because if you saw value, your network's going to see value as well. I appreciate you guys. I love you guys, and we'll be talking to you soon.